Hi everyone. If you are renting out a property, be it a huge property or you are just subletting a room in your house, you need to pay tax on it. If no one told you about this, here I am, sent to you to tell you today. Okay, jokes aside, you guys. Today I'm going to be talking about rental income, how you can save, what is it, when does it need to be paid, how you can pay it, and whatnot. Now, before I forget this, it is very important to know that if your net rental income is more than 30,000 Rand, then you need to register for provisional tax. That's if you're an individual, because businesses are automatically registered for provisional tax. If you're an individual and your net rental income, in other words, after you've deducted your expenses from your rental income, you have more than 30,000 Rand as your profit, then you need to register for provisional tax. It is a requirement by SARS. Yes, people have gotten away with it in the past, but if you want to do things the right way, then why not do it? Rental of residential accommodation includes all of the following: 1. Airbnbs, 2. Holiday homes, 3. B&Bs, bed and breakfasts, 4. Guest houses, 5. Sub-renting a part of your home into a room or a garden flat. Number 6, residential dwellings, like a block of flats and so on and so forth. Those all form part of residential accommodation, right? Now, how is tax calculated on residential accommodation? That is what I'm going to be discussing today on this video. But before, I need you to click the subscribe button if you like this kind of content, or if you want to see more of this, or if you're a small business or an individual and you would like to know more about tax, because in this channel, I simplify taxes for small businesses and individuals. So rental income, basically all the rental income that you receive is added to the other income that you receive throughout the year. In other words, if you're a salaried earner, you work a 9 to 5 and you earn 50,000 Rand and your rental income for that year was 10,000 Rand. That means your total income for that year is 60,000 Rand. And then we'll go to the tax tables and then determine how much you should be taxed according to all the income that you've earned. That is basically the simple way of stating how rental income is calculated. So in other words, there's no rental income that you need to pay every month. There's no rental income that you need to, there's nothing to do throughout the year, basically, except the only thing you need to do is to keep your records of income and the records of your expenses, which is very important. Then the tax that you need to pay on your rental income will be paid at the end of the year when you are submitting your annual income tax returns. Now, it's very important that you note this. Most people have in the past gotten away with rental income. Number one, because it's a cash on cash basis. But SARS now, what they've been doing is they've been checking all the properties that are being bought and sold, bought and sold, bought and sold. And they are checking who owns them. And they are asking questions. So if you've bought a property and you are sitting there with the title deed, and you are renting it out, but you are not disclosing your rental income, then you can rest assured SARS will be knocking on your door anytime now, and it's not going to be pretty. So disclose your rental income, guys. Disclose it. When you've just bought a new property, most cases you're making a loss, and that's good for you because that loss will decrease your tax payable. So just disclose it. It's good for you in the beginning because the interest is very high and you're making losses. This is now in most situations. So just disclose it so that it can decrease your taxable income. Now, if you're wondering how do you disclose this on your now income tax return when you're submitting your income tax returns, if you are someone who's not interested in bothering themselves with that income tax returns, I'm here. I'm a tax practitioner, a registered tax practitioner. I do income tax returns for people. Or else, if you're going to be submitting your own income tax return, then there is a section there specifically for rental income. If you click yes there, then a whole form will show for rental income. It's simple as that, guys. It's not complicated at all. All you need is the address of the property, your incomes, your expenses, and that's it. Very important. Now, which expenses are deductible for rental income? Well, it's electricity, it's rates and taxes, it's levies. If it's an Airbnb and rental agents fees, accountants fees or tax practitioner fees, bond interest only, guys. Remember, the bond is made up of the interest and the capital portion. It's the interest part only that's deductible. Advertising costs, insurance, garden services, security and property levies, wear and tear on furniture, very important. Most people leave this one out. Wear and tear on furniture, guys, you can deduct for your rental income. Repairs and maintenance, not renovations, please. Renovations, something completely different, not deductible. Repairs and maintenance only is deductible. Again, I will emphasize, repairs and maintenance are deductible. Renovations or home improvements, not deductible. Remember, renovations or home improvements, they add a value to the property. In other words, if you add a new garage, if you didn't have a sliding door, you decide to add a sliding door, that's going to increase the value of the property. If you had just an ordinary stove and then you decide to go splash on a 50,000 rand stove, that increases the value of the property. It's not a repair. It's not a maintenance. Examples of repairs and maintenance would be painting, replacing door handles, replacing broken tiles, replacing a window. Those are all repairs and maintenance. Those are the things that you can deduct, not renovations or home improvements. Okay. As mentioned, when I was reading out the list, one of the ways you can also decrease your rental income is to actually depreciate the furniture that is in the property that you are renting out. Now, with depreciation, SARS has a guidance on how you can depreciate. You can just go check it out on the SARS website. It's not complicated. It just shows if this is your asset, then this is how much you can depreciate per year. It's simple, very simple, nothing complicated. Now, if you have an asset that costs less than 7,000 rand, you can write it off in that year. That's the nice thing about it. If you went and bought a fridge that costs 2,000 rand, you can write it off as an expense in that year, as long as it costs less than 7,000 rand. That's the nice thing about it. So you can write off all of it as an expense. In that way, you won't be depreciating it over years or whatnot. Write it off in that year. That's the nice thing about it. Now, which expenses are not allowed? As mentioned again before, home improvements or renovations. You can't deduct these, guys. I've already emphasized this. The reason for this is that this increase the value of the property. Sorry. This increase the value of the property and therefore can't be deducted as an expense. Right? However, these you can use. That's why you must keep a record of everything when you have a property, because these now you can deduct when you are selling the property from your capital gains tax, right? You can deduct these from your capital gains tax when you are selling the property. Now, if you don't know what capital gains tax, now please go check out my video on the different types of tax. I've covered capital gains tax there, and I've explained extensively what it is. I will also leave a link on the video on the description. Different types of tax. Check out that video if you don't know what capital gains tax, or if you need a refresher, check out the video again. Now, when it comes to keeping proof of your expenses and even your renovations and home improvements, at least for expenses, because you deduct them that year, it can't be that difficult to keep track of them. But when it comes to home renovations, if you sell your property in 10 or 15 years time, chances are your invoices or receipts would have faded by then. So that's very important that you scan them. Keep them, but scan them. Very important, because in 10 years time, when you decide to sell your property, that invoice would have faded, I can assure you. So scan them. Even with your expenses, scan them, because according to SARS, you're supposed to keep information for 5 years. So if on the 4th year SARS decides to come dig out the information that took place 4 years ago, you're supposed to be able to show SARS those records. If you didn't know, this now goes for everyone, not just people who are running businesses, not just people who have rental income. This goes for everyone. SARS expects that you keep your information for at least 5 years. So if they decide now in 2021 they want to dig out information that took place in 2019, you must have those records. It's very important. Very, very, very important. If you don't have them, then there's going to be problems. Again, something that's super important, if you are renting out a portion of your home, in other words, in a 6-bedroom house, if you are renting out 1 bedroom, remember to apportion the expenses. In other words, if you pay 6,000 Rand for the person that does the cleaning in the house, then that means you can only deduct 1,000 Rand, because that's the 6th 1,000 Rand of that for your rental income, because you're only renting out 1 bedroom. So that's very, very important to apportion the expenses if only a certain part of your property is being rented out. People often forget this. This is now the apportionment works out for everything. What you can do, what I normally advise people to do in order to avoid a situation whereby they apportion for each and every expense, calculate all your expenses, get the total, and then apportion from the total. It makes life easier. Instead of calculating the apportionment for each and every expense, it's easier to calculate the total expenses and then calculate the apportionment from that, right? There are also allowances that you can claim on your rental income. This is now for the big dogs. So there's also an allowance that you can claim against your rental income. This allowance is called the Section 13(6) allowance. Real estate agents love this allowance to convince people to buy property, and it's a good allowance. But I wish they would tell people all the information, all of it, disclose everything. But anyway, the Section 13(6) allowance says that if you buy 5 new and unused properties and you are using them for residential property, you are renting them out for residential properties, then you can claim 5% of the cost as long as those properties are rented out. I'm going to repeat it. If you buy 5 new and unused, very important guys, new and unused, this would be now if you're buying from new developments, because they have to be new and unused, right? If you're buying 5 of these and you are renting them out, then you can claim 5% of the cost for as long as you are renting them out. Isn't that amazing, you guys? It's brilliant. It's brilliant. But then again, it's also for people that have lots of money, because at the moment, most of us are just buying one day, but we'll get there. Buy 5 new unused and then claim, right? Now, lastly, before I end this video, when it comes to rental, in fact, any other business that you are running, it's very important to keep the records, guys, because SARS has every right to come and ask for you to substantiate the expenses that you are claiming. So always make sure you keep the records. I cannot emphasize this enough. Thank you for listening.